a little bit at the opportunities, challenges, successes around financing green deals or green developments, and that can be quite important variety, all the way from renewable energy production to energy efficiency and many other things. And I'm very pleased to have an outstanding panel, which I will present one by one when I will invite them to give me some initial statements. And we are very happy to have actually different views on this topic. We have representatives from important internationally active banks. We have representatives from state organizations helping to support deals. We have here someone which is actually Annie Shepherd, who is really supporting public authorities into investing into such deals. And finally, we have also a representative here from an initiative around climate bonds, which I think is another question we want to look here, which is about possible new, perhaps they're old, new ways to deal with the financing. Because at the end of the day, and that's where I will stop, the real challenge which we have if we want to push forward the development of green economy and also a green development path for our societies and our places where we live, there is important investments to be done, and the challenge will become more and more apparent is where does this money come from, and how do we actually find deals which allow a fair risk sharing. I think, and we probably will get to that one, a lot of things have happened in the past which have not been always a fair risk sharing, either too much onus on the public side or too much onus on the private side, which has actually left in some places in this world almost a bad aftertaste when one talks about public-private partnerships. And so I think, but I believe we need to revive that, because otherwise we will not be able to actually deal with the challenges coming up. So I will now invite my fellow panel members here to give a first view on this question, and then we will go a little bit through a set of questions to discuss that, and we will also make sure that we have enough time to actually include you, public here, to ask your questions and participate in the discussion, which I think is very important. So, I'm very pleased to welcome, as I said, on this panel, Annie Shepherd, as I said, CEO from Celix Finance, and I will let her explain a little bit more what she is also doing in her introductory statement. We have Annette Eberhard, CEO from Denmark's Export Credit Fund. Then we have Sean Kidney, CEO Climate Bonds Initiative. We have Ulrich Ross, MD and Global Head for Public Sector and Sustainable Financing at HSBC. And we have David Dubin, Managing Director for Capital Markets Origination Citigroup. What I would like to start with is actually first with the view of the banking institutions here at the table. And I will actually go to the very left-hand side of myself, and will actually invite Ulrich to share some initial views with us.
Thank you very much for that and for that kind of introduction, and thank you very much for being here today. Much appreciate the opportunity to talk to you about what is needed in the financial industry today. First and foremost, I think we all recognize the need to bridge the gap between what is investor demand for sustainable investments, the gap for society's need to develop a sustainable future. Urbanization is one of the key themes, infrastructure, etc., export being discussed globally, as well as a strongly regulated banking market and the opportunity to be flexible enough to meet those demands to facilitate that financing. And today, the industry has actually had a huge step forward in its effort to develop sustainable financing solution. What do I mean by that? We have created a new bond market that bridges the gap between what balance sheets are able to do on banks' balance sheets and the need that we see for financing sustainable investments. That's called the green bond market, and that's something we have developed with the World Bank and IFC and the European Investment Bank, key investors such as Zurich Insurance, Standish, Mirova, BlackRock, etc., and a group of banks, including my colleague here on the panel from Citigroup, where we have come up with what makes a bond green and what makes it applicable to sustainable financing. And I think we have sat down, we have created a new forum to get the market input, and that is through ICMA, the International Capital Market Association. But we created a executive committee for green bond principles, and those principles govern the green bond market. And from that, we have seen $60 billion of issuance to facilitate climate investments over the last few years. That has been a tripling from last year, from the previous years to last year. So we had around 40 billion of new issuance. And going forward, it has been across all sectors, real estate financing, transport financing, energy financing, renewable energy as well, general efficiencies, but also adaptation issues as water management, etc. So I think when we see about the product space, we've had innovation within project bonds with credit enhancement features supported by EIB for renewable energy projects outside the coast of England. The transmission grid has been financed with green bonds. So we have been very creative on having cutting-edge technology applying into sustainable financing. I think going forward to really create the scale needed in today's world and for the future to come, we need to think about scalability. How do we create a forum or a financing tool set that will generate financing for the urbanization and the developing markets? That would be absolutely key to the climate negotiations going on in Paris by the end of this year. And I think, together with Sean here, he's been very involved in that, and I hope he'll share his knowledge with the audience about all the positive work that is going on. But we are in a very, very interesting phase where we talk about what needs to be regulated and what needs to be on a voluntary basis. And also, do we need an incentive scheme to mobilize the scalability needed? And that's the discussion that is going on, not only in Europe, but equally much in China, where we're at a conference last week. And I'm sure that something should also be considered in the Middle East. But without further comments on that, I'll pass back to you and say
thank you very much. I just take two remarks out, which we'll park and we'll get back to. One is actually, you said you defined what is a green bond, and I would like to come back on that one.
Sure.
Because I think that's one of the interesting questions to be asked. And the second one is scalability. I think that's a big issue. We've seen lots of more limited initiatives with quite some success, but sometimes the question is, how can we actually get that to a bigger scale? But let's park it for a moment. Okay. Now I would like to ask David Dubin from Citigroup to actually also share a little bit his view on the same topic and get us a little bit going for this discussion.
Thank you, Anders. I would make a couple of comments, and I enjoy speaking at these types of forums, whether it's for green bonds or renewables, because I think there's a number of aspects that we can take out of this type of discussion and maybe get feedback as well from you. I think two things. It's back to basics when we think about renewables. When we look at Europe, there have been very many success stories across the European landscape. But for every success story, there's been a disaster. The tariff deficits, the redo of the tariffs in Spain, the reset of tariffs in Italy, the threat of potential tariff reform in other countries, even if it hasn't come to fruition, makes me think of two or three things. When we talk about creative finance and innovation, CLOs, asset-backed securities, in the right hands are very safe. However, they can lead to a lot of excess. So I think about what happens going forward in the fact that we are at a very interesting inflection point between what banks have done historically and where institutional investors, whether green bond investors or debt platforms that have emerged over the last 3 or 4 years. And I think the way forward is where banks and these institutional investors learn to work better together, because ultimately, in my view, and I've been in this business for nearly 30 years, not 3, I'm a bit older than that. The fact of the matter is these are long-lived investments.
Yep.
They need long-term finance. I come from a view, and perhaps my bank shapes me in that way, where long-term finance has historically been the preserve of banks, but I think that's going to change. Whether it's the Basel III rules or other prudent regulation, I think it's very difficult for banks to handle long-term liabilities. But the issue is there has never been more long-term lending by banks globally in the last 2 or 3 years, even before the financial crisis that affected different parts of the world, or even in the mid-90s when banks were very, very aggressive. So I think one of the themes that I certainly would like to touch upon is this difference between bank lenders, institutional investors, to Ulrich's point, project bonds, project loans. It's getting these long-term liabilities into the hands or the investors who can best handle those types of risks.
Thank you very much. So also with you, I will park 2 things. I mean, one thing is really this whole question about long-term and affinity to who is actually giving the money, be it a bank, institutional investor. I would just open a little parenthesis as I come a little bit from the institutional investor side. I mean, the challenge for institutional investors today is how to find long-term stable investments which allow you to pay whatever you have to pay, especially if you're capitalized pension funds and things like that. So I think there is a real interesting thing. And I also think another important point is really the question if there are other vehicles to be looked at. I mean, you talked about debt funds, bonds, and so on. So we'll park that one, and I will get back to the bonds again when I come a little bit further over here. But we also talked about the risk perception or the risk view, especially when it's about long-term investments. I mean, here we're talking about long-term investments very often. And so I would like to turn myself to Annette Eberhardt, CEO from Denmark's Expert Credit Fund. That's typically, if I would be a Danish company or a Danish whatever, I would turn to her and saying, what can you help me facilitate or lower this risk? And so I would like to understand a little bit from you, how do you see your role in this green investment financing world to help out? And if actually over the last year this role has changed or is actually still the same like it was 20 years ago?
Thank you very much. Thank you for inviting me here. I'm very pleased to be here because during the past 2 or 3 years I've been attending lots of meetings and seminars on green energy and financing green energy, and unfortunately I have realized that not many people or institutions know that much about ECAs, so I'm very pleased to be here to sort of share what ECAs actually are. EKF is a government-owned entity and we are backed and guaranteed by the Danish government. You will find ECAs all over the world, so it's easy to find help from us. And I would actually like to start out with a word back to basics, as you did, David, because the ECA instrument is actually invented back in 1922, so it's a well-known instrument. And we have actually was the first public-private partnership instrument because we always work together with banks, private banks. So when a bank issues a loan, and the bank doesn't like to have the whole risk on its book on its own, we can take over part of the risk. Normally, we could go up to 80% of the risk. It depends on the country we're working in or the project is in. So we can take over risk from banks, share risk with banks. We never compete with banks, we always collaborate with banks. But we have, during the past 5 years, we have also started out working together with pension funds because talking about long money, funding very long-term loans, we realized that a lot of pension funds would like to place their money for a long term. And we have started out working together with 2 Danish pension funds to fund the loans that we are guaranteeing. So that's one of the things that we have been invented during the past 5 years. Our task in Denmark is basically to support Danish export. And I think you might know that we host 2 of the largest wind turbine manufacturers in Denmark, Vestas and Siemens Wind Power. And that's actually the main reason why we have been financing export of wind turbines for more than 15 years. And I think that we are one of the largest financial institutions within green energy, actually. And then I will come back to many other things later on.
Thank you very much. So I think from your side, I can see the importance here also of a public-private collaboration to better deal with risks. I mean, especially when we talk about long-term. And perhaps if you just put 2 or 3 risks on the map, I mean, one is clearly exchange risks. I mean, that's one. It's perhaps a little bit not so easy to deal for you. But then there is also the whole regulatory legal risk. I mean, it was alluded to. If you invest in Spain and based on some feed-in tariff rules and they change halfway through, or you do a long-term BOT project, build, own, and build, operate, and transfer project, where you have to make sure that the regulatory framework is over a certain time frame stable enough that you actually can earn the money you need. I think there is an importance to have institutions you can turn to and actually reduce perhaps the risk for the other people in there. And that perhaps also then, as we had heard already earlier, will raise the question that there perhaps needs to be a mix of lender institutions which actually take different types of risks or are ready to deal with different types of challenges. Thank you very much. So now I would like to because here we're talking a little bit about those who want to give money to projects. But the challenge always is you might create the big fund to invest, but you also need to have projects which actually need this money, and the money has to be accessible for those who have a project in a way that they can actually deal with it. I mean, if they have to pay interest rates way beyond their capacity, it's bound to fail. So I would like to turn to Annie Shepherd, who, amongst others, is now supporting with her company, the Salix Finance, public authorities to do investments in this green domain, and I think you will give us some more details. But what I also want to look to is your previous experience to be on public authority boards and being actually on the consumer side, if I might say so, and also having lived through experiences one way or the other, because I think it's important that also in this debate those sides get closer to each other and understand, because that is probably then the basis for a fair risk sharing in such deals.
Thank you. I think I'd like to say thank you to Dubai, because what I heard this morning was really a bit of a wake-up call for certainly a company like my own, which is funded by government. We are a small company, but to our amazement, last year we were voted one of the 1,000 small companies in the UK that's inspiring Britain. And that's because we have, in my opinion, we have a mission to ensure that we speed up the rate at which the public sector in the UK reduces its carbon emissions. Now, the public sector is responsible in the UK for about 20% of carbon emissions. And what we do is we have, from government, a large amount of money which we loan to the public sector for energy efficiency. And I want to tell you that we have some exemplar projects of what's gone on in the public sector where we have funded, for instance, in the city of Bristol, a street lighting project that cost over £2 million, over £4 million. It's saving that local authority £1 million a year. They were able to pay our interest-free loan back in 4 years, and we started reloaning that money to other authorities. We have just completed a project, and I say this with passion because I don't believe there is any university in the world, including the universities in the USA, and if we're being honest about this, we know that carbon emissions have to be reduced in the USA if the world is really to make a difference. Our project at St Andrews in Scotland has reduced the carbon emissions from its data centre by 40%, and that the repayment of that money for that achievement was over 4 years. And we have lots of case examples, and we've got some things that we can share with you today. And I think for me that what we're doing now is we're trying, although those pounds we've made sweat, every pound we've been given has been loaned out now at least 3 times. What we're doing now is we're going to other big government departments. So I now have nearly £20 million a year going into academies and schools where they are, because of the stock and the type of stock we have in the UK, schools are big carbon users. And we have projects to make our schools world examples of what can really be done if there's this sort of political commitment that we've heard about today, driven by how do we create projects, but how do we get over some of the real financial hurdles that mean that the public sector and other parts of our economy can actually take advantage of what is available. So I hope that's of some interest to you about what we're doing, and we're very excited about what's in front of us. We've just completed a deal with the universities in England, where we're putting £17 million each into a joint fund, and next year we'll spend 32 million on energy efficiency in British universities. And that's now what we're doing with our money. We're going to other institutions and hopefully some of the banks to say, can we bring in extra finance so that we can drive this harder and faster with the sort of urgency that we heard about this morning from Dubai. Thank you for listening.
Thank you very much. So we have perhaps already a partial answer to the scaling up question, which is really creating well-running models like the one you just presented, and then actually inviting other institutions to join this same model to actually scale up the funds to be invested. Now, at the very beginning and throughout the discussion, we came once or twice on green bonds or climate bonds, and I want to push that one a little bit further. And hence, I'm very pleased to have with us Sean Kidney, CEO of Climate Bonds Initiative, to give us perhaps some ideas what you're doing and where you see this whole climate bond development go, and perhaps already help us see where it could answer some of the questions which were raised.
Well, first let me just make a couple of points that people don't realise about the bond market. It is the market. It's a $100 trillion market. Mm-hmm. Equities is currently about 63 trillion. It's been usually ignored in discussions of climate finance. It is a critical piece of the capital pipeline.
Absolutely.
Most importantly, from a refinancing component. I'm absolutely with David, that the game we have to get to is to shift the way we manage capital in societies. So those people who have expertise, equity investors like Adenium Capital represented in the audience, like banks like Citibank, deal of projects. And then when they build those projects, and when they're secure, safe, and they look like a pension fund, they flip them to pension funds. We don't have enough capital to do what's required if we have banks holding these assets for 20 or 30 years, particularly in the context of recapitalisation pressures. But this applies to utilities as well. We need utilities to get their act together and build. If they can flip these assets, we think that's going to be a better way of managing the capital pipeline. So that's just a bit of context. It's also important to note the scale of the challenge ahead of us. The International Energy Agency talks about roughly $53 trillion to be invested between now and 2050 in mitigation activities, and we haven't got to the adaptation, which is about the same. Because guys, we've got 2 degrees warming in the global climate system. You are going to have to build storm surge protection across the coast here in the next 15 years. This is something we have to start thinking about. So there's a very large capital pipeline involved here. We like to characterise the challenge as a green infrastructure challenge. I think we spent too much time talking about it as a carbon challenge. Yes, I want carbon pricing. But actually, if we look about what's got to be done, which is energy, which is transport, which is also water investments, all of these things are infrastructure. And the tools to finance infrastructure are tools we've been using for 50 years, for 100 years in societies around the world, including in this one, in the UAE. We now just have to be aware that we've got to build future-proofed infrastructure. That's the difference. Climate-proofed infrastructure. And roll out the same old toolkit, which is floor pricing, which is guarantees, which is regulatory provision, which is correct zoning approaches and so on. So that's actually the agenda going forward. So I don't want to get away from that because that's what we're trying to do. But we have a short-term opportunity. We have about 5 to 10 years where we're going to see a world, we are seeing right now, a world that is awash in capital. It is slobbering around the apartments of Ulrich Ross here, pouring out the ears of investors, looking for yield. It doesn't have yield. So we now have the German government being paid to look after people's money, minus 0.5% interest rates and so on. This is extraordinary. Now, of course, that doesn't apply in India necessarily, which is one of the arbitrage opportunities the richer economies like UAE need to pursue. We have investors who manage this capital who want to do something about the biggest challenge of the century, climate change. At the UN Climate Summit a few months ago in New York in September, we had $43 trillion of assets under management saying we must do something about climate, and they stand ready to invest. Of course, they were our pension funds and our insurance funds, so they don't want to actually take a big haircut on their own. They don't want the first mover disadvantage. But if you give them a product which is comparable pricing to what they have to invest now, they will choose green because they're aware of the macro risk involved. So this is a very big opportunity. We had the international insurers, $30 trillion, come out and say more than that. They said they would multiply by 10 by 2020 their climate investments. Straightforward blanket commitment. No ifs, no buts. We've got to give them the investments now. That's the job in front of us. So what have we been doing in the green bond space? We've managed to grow in this particular part of the capital pipeline a thematic market to make it easier for investors to find what they need to find. That's what Ulrich's working on. That's what David's working on. It's grown from 11 billion a couple of years ago, 37 billion. We're on track to somewhere between 80 billion, according to Michael Liebrich at Bloomberg New Energy Finance. We think 70 to 100 billion of issuance this year. And we are now looking for $1 trillion market within a few years. That's what it looks like. That's what the banks are telling us. Just 2 banks here. There are many banks. There are now 50 banks working in this area. And that 43 trillion. We have 34 of that trillion represented on our standards board specifically because they want the investments and they want to know where they are. So what to do? Just to wrap up. Well, let me point you to China, where we've been working for 18 months. The People's Bank of China has just announced that they will be a green bonds market in China. The first one will come out in June. They will be introducing tax benefits for green bonds. They will be providing a strong supervisory regime for this, and they will be encouraging a variety of risk mitigation tools for green investments as distinct from others. They are turning a supertanker there much faster than any of us thought they would. What could the UAE do? What could happen here? 2 things. One is you could pioneer a sub-market. You could pioneer a green sukuk market, for example. We have the phenomena of sukuk over the last 5 years. Really, it's an extraordinary growth. There's no reason, in fact, rather the reverse, I think we have an obligation to grow a green component of that around the renewable energy, around the transport, and around the other kinds of green investments involved. And you could work with the other Islamic countries who have high interest rates. Big example. In Pakistan, if you build a solar farm at the moment, over the 20-year life of that financing, 2/3 goes in interest. If you could halve that interest, get it down to 7% with the support of sovereign wealth funds or whatever, you would save 1/3 the lifetime cost of that solar farm, which makes the difference between it competitive and not competitive with a coal-fired power plant. That is a massive contribution. It could be done through a green sukuk market.
Thank you very much for this very positive outlook. Now let me come back a little bit on 2-3 things, because I think if I listen to you all, we all agree we need to develop markets like the bond market to help really to balance things in a different way, to bring in other investors. I think it's also very important that we get the institutional investors to really occupy this field. But I think what we what we still need also to address is a little bit, the scaling of the projects to find. I mean, a challenge I sometimes see is that sometimes we have, especially when you talk a little bit before with development banks who actually have run big investment programs into sustainable infrastructure or into green infrastructure, they were actually saying, my biggest problem, that was actually at this time the Asian Development Bank, is actually having enough good projects. So I mean, so the one challenge will be, we need not only the money, which we will need, because the forecasts, as you said, are incredible to do something, but we need also to foster projects, and there the question of scalability comes in. And I think the second one really is the risk aspect. We're talking here about very long-term investments, which, as you mentioned, are in infrastructure, typically providing services for the population, which very often are depending on regulatory frameworks. Because, I mean, you take it from energy pricing to water pricing to pricing for transport or God knows what else. I mean, it will have some impact. So one question I wanted to quickly run around is, first of all, is we all talk about green bonds, green investments. Can you just, each of you, give me a two-sentence definition what you understand under a green investment? Because I think it's sometimes it feels like it's everything and anything for everyone. So I know it's not for you, but I think it's important that we also get clarity on that one, because it will also help then when you get further to. So can we just have a quick run through the panel, and we'll start with Ulrich?
So Sean, why don't we share this between us? So I'll say what is a green bond, and then you can say what deems green. Yeah. So green bond consists of four things. There are four principles you need to follow to make a bond green. The first one is that the proceed needs to be used for green projects. It's that simple. So what is green projects is what Sean will talk about. That's his core theme. The second one is you have to implement a process that will select what is green in your company or in your governments. So what is the process for me, for my selections criteria? The next one is you have to also carry or track the cash flow, so traceability, to demonstrate that you're allocating your proceeds to green. It's like when you look at your monthly bank statement, you can follow what goes in and what goes out. So typically people set up just an account where they can trace the cash flow, so they can always show to the auditors or to any investors that this is actually invested into green. And the last bit is that you have to say to investors every year in an investor letter, that could be 2 pages, that we have done the following investments. We have this amount outstanding that we have invested yet, but we tend to do that within the lifetime of X, Y, and Z. So an investor letter is an obligation to inform investors about how you're investing your money into green projects. So it's very, very simple. 4 different steps. It doesn't take a whole lot. But what we say is always transparency and quality of a green bond is absolutely key to success. That's what investors want to see. Transparency in the form of tracing the cash flow, and quality of selecting projects that are deemed green. On that note, Sean, I'll hand over to you.
Okay, Sean, now we want to know, what is a green project?
Well, the first thing I'll say is it's not a matter of opinion. It's not our opinion, it's not your opinion, it's not your opinion. This is a sector where we have a strong science base, where we can relate directly to the International Panel of Climate Change, we can relate to what the climate scientists around the world are telling us has got to be done on the mitigation side and has got to be done on the adaptation side. We should look to the experts as we would if we were building a bridge or building an airport. That's the first thing. But to give you a clue of what they're telling us, we know that clean energy is critical for this transition. We know that energy efficiency is critical for this transition to a low carbon economy, but not shallow, not minor. We need steep, we need ambition when it comes to energy efficiency. Now that will mean green property. I can tell you now, there are billions of buildings in Dubai that will qualify today to back a green bond. I can talk about that later. But it also applies to low carbon transport, rail, electric vehicles. It applies to water for adaptation, sustainable water. It applies to agriculture and forestry. That's about adaptation to ensure resilience and about mitigation. It even applies to things like broadband, which is a critical enabling technology for the smart city, for aviation avoidance and so on. There's a long list we can go through, but you get the sense. The key thing to note is we are talking about significant transformations of our economies, and there are significant opportunities for inclusion, and there's a bunch of resources you can use to determine what can be included.
Thank you. I think we got a very good definition, and I don't want to over-belabor the theme, but anyone here wants to add something to that? Good. Yes?
Just one thing then, because we're talking about scalability, and to sort of take up the word, what is a green bond? For me, a green bond would be that if an ECA, together with a bank, are investing or financing green projects, wind turbines or solar projects and so on and so forth, we would like, of course, to sell off the projects, because after the building period is done, the commissioning has been taken off, it would be a very good asset for bond market to finance the rest of it. And we would have another capacity in our book. So
exactly right.
So that's a way to
example.
To work together, actually, that we as ECAs with governments backing us to give birth to all those green projects, and then we can sell them off. So
but I think we're touching upon something very, very important here. How do we crowd in funding? And I think what has proven is definitely on the EKF side, you've done a fantastic job of facilitating these investments. But we're also seeing new best in classes. We're seeing the Green Climate Funds being set up by UN in Korea. Very, very important initiative. We're seeing the UK Green Investment Bank facilitating investments in the UK that would not have been facilitated had they not been there. So I think we have the mechanism and know-how to support projects being developed and then financed by the means of green bonds or project bonds or infrastructure bonds or what have you. But again, in general, I think we have the tool set, we have the innovation, we have the facilitators that is critically needed to create scalability, and we now have a new model that can support the whole thing in the bond market as well, especially in the light of the current regulatory environment we are facing and the need for a quick and fast-growing urbanization.
But it's not necessarily simple in the sense that the scale of what we've got to do, as you're saying, is so huge that there are some risks here that investors won't take on. One is policy risk, the scale of policy risk. This has got to be pushed hard. So these bits and pieces of risk to make the investments viable for institutional investors are going to be picked up by public sector bodies like the import-export banks. That's exactly what they need to be doing. We just need to make sure they're concentrating on green, like facilities like yours in the UK looking at energy efficiency, like development banks. This needs to be a new role for development banks. We need the Islamic Development Bank, for example, to focus on leveraging private capital, not on direct loans.
Okay, I think I really got a very good view on what you want to do when you have created those infrastructures and you actually want to sell them off and get them over to bonds and so on. But what I'm really a little bit still struggling with is between what I heard about the great projects you're doing and the size of them and the total figure we heard. I mean, the question really is what, and it will be a question for you, is what can we do to actually not only scale up our long-term financing capability, which I think we've now demonstrated and which can be done. I mean, it's never easy, but there's at least a path to go. How can we now actually generate a real priming the pump to actually generate so many more projects? Which by definition will be smaller because you will not have, I mean, it will be difficult to do a 1 trillion project. I mean, it will be very difficult to imagine. And actually also to include in that one, you've spoken about many projects which have a quite short return on investment time, which is what I would call the sweet spots in energy efficiency. But we all know we would like also to reduce energy usage in our buildings, which is probably more like a reduction of 20 to 30% if they're well done, and which then raises my return, payment return on energy efficiency much longer. So what do you see can be done, A, to move from the sweet spots to the more difficult ones, which we also need to do, and what can other institutions learn from you, or how can you become like a seed for other institutions to actually get all those projects going, which at the end we then can long-term finance with bonds?
Well, I think that to call it a suite is not quite right, because I think that the answer about the science and the technology that is available now is changing so rapidly, and that's the intellectual heavyweight material that we have that can be guiding the world as to what it needs to do. Now, the big projects that need the bonds, they have to be driven by the scientific knowledge of those who know much better than me what is happening to our climate, to our ecosystem, what we have to do to save this world that we live in. Now, when I hear that, I sort of feel it's too awesome, because I'm just thinking of a wee school in the north of Scotland that they're trying to get us, and we're looking at how we can finance putting a cover on a swimming pool so that they can save a certain amount of electricity. The thing is, because we're human beings, all of this matters. The little things that make people's lives better, that mean that we are saving energy, because part of that big picture is we have to be more energy efficient. And that means that we do have to think big, but we also have to think little. In my company, I require every member of staff to tell me what they're doing in their life, in their home, to cut their energy usage. We're talking about behavior change in the way we want our world to be. Now, we do small projects, but actually, because of the success, we're scaling up those projects. We're spending significant monies in universities. We're certainly going to be spending a lot in the hospital sector, which, I mean, it would make your eyes water to know about the inefficiencies of the energy in these very large 24-hour, 50, every week of the year, every day of the year institutions. So I think that what we need is this combination of the big projects, the big finance, combined with what we are doing in our nations to make a difference for the people that live there. Because it still is terribly difficult for people to understand that what happens in that part of the world is impacting on this part of the world. And the people who are being impacted on are often in impoverished situations. And that means that there has to be a global response. What we're doing is small, but I think it makes a difference. So we have to do both and make it work.
Just an add-on point. I believe that what we need the small, but my question was actually to you, how can we create more small? Because we need to add it up. I mean, at the end of the day, that was my question. I don't believe that there are only big projects. There are some big, but there's lots of smaller things which we need to do, which help also the behavioral change, because it's closer to people. But we need to get that one also going.
Yeah, there's people in this room that probably don't know how to cut their energy consumption in their own home. And there's technology and there's information out there to help you. What we're trying to do is to create lots of, there's a big education process still going on so that people could understand what is achievable. But the innovation center that we were hearing about earlier on, that's based in California, that's looking at all the new innovation that's coming out, this is something that needs to be available for the world to understand.
Thank you. You wanted to make a remark.
Just a brief remark. I perfectly agree with you, because I think that the easiest way to sort of improve the environment is to save energy, to save water and things like that. But the problem is that if we don't set up incentives to save energy or to save water, it's impossible or hard to make people behave in another way. So just to make a brief step back to Denmark, I think what we've been doing in Denmark since 1970 is that we've actually taxed heavily the usage of energy. That's the reason why we all drive around in very small cars, actually, because, but I mean, it's a very good incentive. It's too expensive to drive in large cars. We have to isolate our houses and things like that. And just to bring it to a larger sort of scale, we know a lot of Danish companies looking into Russia to sort of retrofit the Russian building materials all over the country. But there's no incentives for the community to save energy, so they'll not do it, even though it would be very, very good idea to do it. So incentives, I think that's a very, very useful tool to change behavior.
Good. One remark from you, one from you, and then I want to open a little bit up for the public also. I think this is a discussion we could hold for a very long time, and unfortunately we'll have to stick more or less to the schedule, but please, you.
No, Anders, the only two comments I would add very quickly is if we're going to see a scale up very, very quickly, and I think in parts of the world we have seen that, for example, in South Africa, where there's been a tremendous renewable build program, but that's an exception. That's all done in local currency. We need a couple of tools. We need to figure out how to modify or mitigate foreign exchange risk, because I think embedding in tariffs over and over again, dollarized or euro or other types of currency into a local tariff base leads to different types of issues. And we also need interest rate swaps, which can't always be managed by the banks because they're very capital intensive. So if we're not going to see the development of local currency markets that are very long term, then we need to figure out those types of tools. And there's a couple of ideas that are out in the offing, but no one's got it down quite right yet.
Thank you very much. That was actually one of the risks which we need to keep in mind if we want the money flow around, because otherwise we'll have a challenge. You wanted to do a quick remark?
Well, on one hand, there is a deal flow bottleneck. You're perfectly right, and your work at Global Infrastructure Basel highlights this, where there's not enough being done to get these things out to market so that the Danish Export-Import Bank can do a loan or guarantee a loan. And there's infrastructure bottleneck in many countries. The US is by far the worst, where infrastructure has simply been neglected for 20 or 30 years. So that's one problem. What we're doing in this market, those of us working in it, is creating a bit of a pull-through mechanism. By showing that there is investor interest, and it's large and liquid, we are exciting the interest of the infrastructure decision makers in a way they haven't been excited for a while. And that's a positive thing, and that's part of changing the narrative about this transition to green from a cost narrative to an infrastructure opportunity narrative. So you get a pull-through kind of effect. So we now get calls from governments around the world saying, how do we get involved in this? But of course, what's really got to happen is what, for example, the Indian government is doing at the moment now, which is pushing through infrastructure planning. All around the world, this needs to happen. What we need to do is to work with those governments who are taking an active step, who want to look at solutions and deliver to them the sort of solutions that David talks about that are going to make the financing work. And that means foreign exchange risk tools. So in India, we've got a proposal that the doubling of the national coal levy should go towards a foreign exchange hedging pool run by the government. There's some receptiveness about that. In other places, it's a straightforward partial guarantee tool that the IFC uses. But I just want to stress, you get the interest rate down in emerging markets of high interest rates, you will get a river of projects because they become viable when they're not currently viable. We are also talking about starting markets. Korea started a bond market by bringing together all the blue chip issuers in the country, the chaebols, and said, we want you to issue. On the back of that, a market that had a greater appetite for risk developed. The Reserve Bank of India, after 10 years, has finally bitten the bullet a couple of weeks ago and told the blue chips in India they're going to be issuing bonds, infrastructure bonds going forward. That's how you kickstart a market. Then on the back of that, ecosystems and tools come in. So I want to go back and say this is something the UAE could do, or Dubai could do. Help kickstart a market for green sukuk and bonds, which would benefit Morocco, Egypt, and those countries who are willing to take on the green infrastructure challenge. Morocco's done a lot of work. Egypt is now building this vast solar farm in the desert. They're beginning to move because they want speed of change. Support them through these kinds of measures. And that's how we'll get the rest of the sheep coming along.
Thank you. On this one, I would like to open for you here in the public for some questions. I think I will start here, then I go over here, and then here. So please. Sorry.
I see the focus is only on energy sector, and we're not looking at other sectors of the economy. We're not looking at agriculture investment. We're not looking at land use in general. So this is an area perhaps that investors would need to look at, and they need to perhaps address, because a great deal of the emissions is coming from land use. I guess around 27% of emissions of greenhouse gases are coming from land use. The energy sector is a low-hanging fruit. You always can target those, and all the foreign direct investments are addressing those as a byproduct, as co-benefit. But really the challenge for the investment is to go to areas where, it really requires some courage and some risk sharing. The other point I should make actually is that for all the bonds that we have, all the money you have that you can think of, we have an institution that has been created by the governments now that's called the Green Climate Fund. It's ready to receive all this fund that you can imagine, that we have a pipeline of projects that we can finance, and we're ready to put those money to work. Now, tell me, what is your role in technology transfer? Because that is really the challenge for all of us here. Sometimes, some people who really afford technology to buy, but there are regulatory issues within your countries, within the environment that you work with, that are, depriving, recipient countries from being able to tap on those investments. And what you are doing within your governments to be able to create an enabling environment for transfer of technologies. Thank you.
We have a working group looking at agriculture, forestry, land use. AFOLU, as it's in the UN climate jargon. It's a critical area going forward. It's a critical area for water adaptation. It has enormous sequestration opportunities, and there's a big resilience issue in the context of severe climate impacts that we're going to start achieving. So I absolutely agree with you. I mean, a simple thing in the Gulf is drylands agriculture and the opportunity to grow that. So it should be in there. The question is, what are the nature of capital investments? Realistically, the large capital investments are going to happen in economies that have capital, like the Gulf, like Northern Europe and so on. There is scope over time to grow it in other places, like Ethiopia and so on. This is one of the things we need to look forward to. The initial bond issuance in the area will be supply chain. It'll be Olem or Nestle or whatever, investing in improving the supply chain to achieve similar outcomes rather than at the direct agriculture. But couldn't agree more in principle. My second point about technology transfer, I'm a bit dubious about technology transfer language. Let's just talk this about investment partnerships that will lead to technology transfer. So if we develop an opportunity in Jordan for large-scale agriculture, let's say, which has a climate aspect to it, and then we involve some international companies in sharing that opportunity, that's how we'll get the technology transfer. We're not going to get anyone handing over their IP for free. That's what I'm going to say. Joint ventures, public-private partnerships will achieve that objective.
Maybe one comment from my side as well. Sorry, do you want to?
No, go ahead.
I think it's all about risk sharing. And the risk sharing we're seeing, everybody, the banking industry is heavily regulated today. We are not being compensated for taking extra risk in the financial industry. The bond business, they want a similar credit risk as they face for a similar return. So again, the money is available at the right term. So it's really how do we scale and crowd in new financing also for land use management, for example. And I think we have to seek advice from some of the new funds that are being set up. We have to get expert advice on risk sharing, capacity, and how we can facilitate that to the financial market as well. But mechanism will exist out there. Our knowledge are getting better and better by the day. So working groups are established around this to facilitate that knowledge sharing hub, standardization, so we know what the risk will cost. So it is happening slowly. We're getting more labels on everything, different industries as we go along. But it's something that we can unite with the bond market and bridge the gap for the financial sector that clearly has its challenges as well.
David?
No.
Okay.
I think it's all
okay. Before going to the next question, I think on the technology transfer, just to add one thing, I think the importance is also really that we make easier available to understand what technologies are coming out for specific problems, and probably also create better partnerships also with universities to actually entice them to look at certain problems not yet well solved, to actually push research forward. And there are multiple countries who actually do have collaboration programs now going to actually look at specific some of those problems. So please, if you could make it short, we're here running really short, and I want to also reward the last question here.
Yes, it's very short. My name is Chitra Mazumdar. I am risk mathematician on R Square Risk Lab. So far, it is very, very encouraging, very, very interesting discussion on market risk. On David mentioned about the interest rate swap, because bond means the inverse relationship and everything. What about credit risk when it's a huge counterparty involved? Like you do the potential future exposure and how you calculate those exposures, because green is very new, but it's mandatory also for the sake of our climate.
Is a quick answer possible? Yes, please.
Oh, I think I could hear your question, but it's a little noisy up here. As an ECA, we actually cover political risk, commercial risk, and also the technological risk, of course, because many of the wind projects that we have been financed is actually what we call SPV projects. So we cover all the parts of the risk, but not 100%, of course. So we would cover it as long as we're in it. And I think just to also scale this a little bit up, if the bond market, the green bond market, would need some kind of government coverage for some parts of the risk. I mean, risk is such a nice little thing. You can divide it in very small pieces and say, we would like this part, this kind of risk to be covered. And that's what the reason why I think we should also bear in mind the old instruments, the old institutions. And I would like to stress that, because I've seen a lot of new institutions coming up during the past 5 or 6 years. It takes a long time for those institutions to sort of be adapted into the banking market and thereby be useful for us. So it's important to utilize the institutions and the instruments that we already know before setting up something new.
Maybe a very, very quick comment to that one. Investors are also telling us that we know how to take credit risk. That's what we do. But this market is developing. We're getting a lot more information. We also want to learn how to handle green risk. So it's a brand new risk class that investors are up for. It will take time to educate the broader market on it. But rest assured, this is what is happening at the moment.
David?
Look, I can vouch on a number of institutions that I talk to on the banking side. Counterparty risk is enormous, and it comes in, as you say, many forms. It's the single biggest impediment in some regions in the world as to why renewables is not occurring. The state-owned utility, and not to pick on a state-owned utility, but in general, certain state-owned utilities, their credit ratings have declined substantially because they've taken on new build risk through the amount of tariff that they have to absorb, because either their regulators or their governments are not allowing the full tariff to be passed through to the consumers. And until that aspect is corrected, which is a mix of politics, regulation, and the state-owned utility in those particular circumstances managing that, then those counterparties are going to continue to decline, and that's going to be a large impediment to renewables or other forms of utility build occurring.
Thank you. Last question.
Thank you very much for the panel. Very interesting work. And I just want to put it up front. I'm not an economist, so if my questions seem a little bit naive, please excuse me. All I've heard now is people are trying to tweak or refine existing instruments to finance energy projects, green projects. Has there been an attempt to devise new economic or new financing instruments to deal with these projects, because they are substantially different from the standard projects that banks have been doing for the long period? And the other thing is, bankers, since they've already established, let's say, divisions to invest in green technology, green projects international, has there been any attempts to try to apply these to projects here in the UAE? Have you tried to finance projects in the UAE which can be deemed as green projects? Thank you.
Well, I'll try the first part, and you can talk about the UAE, or David can, and others. But in terms of new instruments, you know, there's been a lot of work on new instruments, and I would argue most of it's been a waste of time when it comes to financial instruments. There's been complex carbon bonds, there's been carbon derivatives, there's been all sorts of things. Interesting for retail, but at the end of the day, the institutional investors, the people who actually manage the money, are interested in vanilla instruments. That is, instruments they're comfortable with. The word innovation is not a good word when it comes to institutional investment. I like to kill it. I would rather say that we are using bog standard, ordinary, familiar investments with a new application to address a macro risks that investors face, which is a 40-year climate change risk. They find hard to deal in their portfolio management, right? That's essentially it, which means we are much more interested in cannibalising and successfully doing it, a bond market, vanilla bonds, a fund brief market, covered bonds. We have the first green fund brief in the market in Germany in the last week. We have green sukuk, an established market sukuk. It's already been developed. We now need to simply adapt it to make it work, and so on, and so on, and so on. So I'd be pointing you in that direction. I don't think there's a need for new instruments. And just as I fully agree, is I don't think there's a need for new institutions. Rather, those institutions that are already doing this work need to be repurposed. The European Investment Bank now allocates a quarter of all its capital each year to green. This is the sort of thing that's got to happen. We need to move Export-Import Denmark from being partially green to being 80% green, and so on and so on and so on. These are the challenges of the future. So I think that's the way to do it. That's the way we'll move fast, because we have to remember we have a clock ticking here. Speed is of the essence.
And from my side, I think keep it simple equals scalability. If you make it too complex, the barrier of entry will be too high. So basically, we are taking known technologies, applying them to sustainability, and then we're also working with the existing resources that exist out there to develop that risk mitigants that is needed to crowd in financing. Good example, we worked with EIB, gave them a lot of advice on how to scale up their credit enhancement facilities, and that facilitated 2 project bonds that were let on the windmill transition grid. So again, there is a lot of innovation out there. We have a ton of tool sets in our bag. So I don't think financing and innovation is really the problem. Typically what I hear is you mix it up with actually risk-taking of innovation, risk, new risk or difficult risk to take. And that's not to confuse it with the access to capital in general. The capital and solutions are there.
Okay, I must admit we have overrun the time of our panel, but it has been a very, very interesting discussion. I would like to thank all the panel members here. I think we've been able to distill some very good takeaways. I mean, I think one important one is really the importance of bond markets coming in to actually take over such projects when they have been developed. I think another one is really the need to scale up projects to actually generate more projects. And it's not about mega projects, it's about more smaller projects. I think we've touched on some risks which we still need to look at. It's currency risks when we go global and all those things. And finally, I think very important last message is we need to stick to simple solutions which we master, because I think what we want to do is already complex enough. And perhaps a very last one is we need also to keep a good eye on new technologies coming, because this is also a very fast-moving world. And as these are long-term investments, we want to make sure that we don't have to replace them too quickly. So thank you again to this outstanding panel. Thank you to you all. And we close here the session. And I just want to recall, we'll start, I will give 5 minutes extra time. We start 10 to 4 with the next panel here, which will be about global partnerships building green PPPs. Thank you very much, and a good continuation.